Simplicity is never a matter of circumstances. Simplicity is always a matter of focus and Voskamp. And my friends, we focus like a laser beam each and every day, 10 to 15 minutes on price movement, on trends, on weekly vertical crossovers and 2-day recrosses, of plotting, planning, setting our profit and loss bands before we enter trades so we know what to expect, where we expect the market to go, and when to take our profits or have to deal with losses. The best loss is always your first loss. When things don't hit, don't pop right, you close the trade, you close your practice trade, and you move on. The reason is because losses will kill you. Profits never do, but losses can destroy you. They'll destroy your confidence as well as your virtual trading account. Now, let's jump into these charts. Everything up for the day but the Qs. It's down a little bit. Bitcoin up 3.63%. We'll get there in a second. And my friends, still working to get the channel. The channel's still there. Chartingwealth.com is still there. You can still go there if you want to subscribe to the daily reviews. This, though, is going into the second day that I've not been able to post our reviews, and it's driving me crazy. That is when we post those, they automatically go out to everybody who's a subscriber, and that hasn't happened now, going on, well, 3 days at this point. My folks are working both at the company that manages the website and also my people. I can't understand how this could be so complicated, but I am not that person. I don't know the technology and how it actually works, but I don't know why we can't sign in and post our things, but I'm being told they are working on it. But this is unacceptable. It will get resolved, I hope, sooner rather than later, and we'll continue to move ahead. But nonetheless, everything we do every day is still available to you at YouTube, also the podcast. So don't fret on that. Look in the show notes for the materials that you need at our YouTube channel. We'll keep moving ahead. Let's jump into what's going on. S&P 500 up for the day 0.58%. Now we have a green spinning top that's forming. It's been 2 weeks of strong down movement, and now we see where things are sort of price percent oscillator still negative, still heading down but flattening. Derivative oscillator also losing that downward momentum. We go to the 2-day. What do we see there? Of course, this is the first day of the latest 2-day candle. It is pushed a little higher than the high on the last one. Green up candle forming. Price percent oscillator still negative, flat, maybe heading up a little bit. Derivative oscillator losing some momentum. We'll see how the market ends up on Thursday. But again, we had really good opportunities to catch some strong down movement previously. I kept warning you, pay attention, look at your profit and loss bands. Where did you set your profit margins? Don't hesitate to take profit. Now, as we see things weakening, they are weakening quite significantly. We look at the half-day chart. Of course, we had that half-day chart rollover going up on Tuesday morning, popped up Tuesday afternoon, Wednesday morning, Wednesday afternoon as things continue to build. Price percent oscillator going up, derivative oscillator going up. Let's go ahead and move our trend line and see what we can track here. There we go. Got a decent trend line, so we'll continue to watch, see what's going on, and if the market's going to continue to move up, how much weaker things are going to get, or are they going to roll over? Right now, moving up. Now we go to the Qs. It's different. Technology stocks down 0.29%. Of course, it was our strongest crossover. Happened back on the 26th. We see that price is still below the weekly trend line and the 2-day trend line on the weekly chart right there at it. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Look at the 2-day chart. We have a green candle forming, pushed through the 2-day trend line, staying below. The wick pierced the weekly, but as far as the body of the candle goes, it's right there below the weekly. Price percent oscillator still heading down. Derivative oscillator losing some downward momentum. Again, first day of the latest 2-day candle. What do we see on the half-day chart? Of course, that half-day chart crossed over going up back in the afternoon on Tuesday, up Wednesday morning, and then losing energy, actually moving below that half-day trend line right there on it, just a little below it. So again, we'll watch and see how things are going to continue to progress, but we had a really great opportunity for some good down movement as this progressed down last week, and we talked about that. So again, we'll watch, see how things continue to develop, but remember, overall mood on the Qs still strongly down. Now we go to 20-year bonds. They were up for the day a little bit, just a little, 0.20%. We see that red down candles forming, hasn't reached a lower low yet. That lower low was actually 2 weeks ago, back on the week ending Friday the 26th of February. We see the price percent oscillator still heading down. Derivative oscillator looks like it's losing a little bit of momentum as we hone in a little closer. What do we see? We see that sideways slide and a little bit of up movement as far as the Heikin-Ashi candlestick goes, along with the derivative oscillator still negative but heading up. That's the price percent oscillator still negative and heading up. Derivative oscillator losing downward momentum. So we'll continue to keep an eye on things. Pay attention as to what happens on Thursday, how this candle closes. What do we see on the half-day chart? Of course, it has been going up since it crossed over. Well, the price percent oscillator has been slowly trickling up after it crossed over, back on a big bump up on both Friday morning and then Friday afternoon, the 26th of February, but sliding sideways and down for a while. Over the last 2 days, we see this up movement there. And like I said, the price percent oscillators continued to remain positive that whole time. So that is where we are on bonds. We go back to the weekly. Remember, you always start with your biggest chart first to see what the overall strongest trend is. And we see on the price percent oscillator that it is flattening out just a little bit. The derivative oscillator still gaining some downward momentum, but again, price percent oscillator still heading down, but not at the angle, as strong an angle as it had been. Gold has hit a lower low this week. Again, up for the day, 0.51%, price still below that weekly trend line. 2-day chart, of course, we see flattening there of the price percent oscillator, derivative oscillator losing downward momentum. Green candle forming, and we see that price has pushed above that 2-day trend line, still below the weekly. Half-day, we had that crossover on the half-day chart back in the morning on Tuesday, and we'll see if we can find ourselves any kind of trend line there. We do. And the derivative oscillator gaining momentum, price percent oscillator heading up. So again, keep your eye on gold where that 2-day chart is and whether or not this push to move up continues or fails there. Of course, like a lot of you, I'm ready for gold to bottom out and start to head up, but I don't know if that's in the cards yet. We don't have a 2-day crossover going up and sure don't have a weekly vertical crossover. So we'll continue to wait, watch, and see how gold continues to move. Lastly, we go to Bitcoin, up for the day 3.63%. Look at that price percent oscillator beginning of the week. Remember, it was crossing over the red signal line. Told you, don't go out and spin the farm. In fact, we never urge you to do that. Why? Because we're not a stock calling service. We're an education firm. We want you to practice trade with us. But we talked about how if it was an up week, we could see that price percent oscillator pull through, which it's done. Remember, you don't have a crossover until the candle closes. We never call it that way. Derivative oscillator still negative, but that price percent oscillator just won't cross over yet. Going down, green up candle for the week. Go to the 2-day. 2-day still negative, even with some of the up movement we have seen, particularly today, but also yesterday with that up movement, but not enough movement for there to be a 2-day recross. That could be coming. We'll watch it, wait and see. We said up for the day 3.69%. Go to the half-day chart. That half-day crossed over. Of course, back on Tuesday, up again on Wednesday, 3.63%. So we'll continue to watch, keep an eye on things. If Bitcoin does recross going up, might give us a jumping in point for some further up movement, or it could just devolve, and by the end of the week we have a crossover going down. Don't know yet which way it's going to go. So we'll be patient and let the charts lead us. That's where we are, folks, as we end the day. Thank you so much for being with us. God bless. All the best from the whole team here at Charting Wealth World Headquarters.